Welcome, everyone. Today I'm joined by Managing Editor James Kleimann to talk about CoStar's interest in buying Realtor.com, the one-day mortgage launched by Better.com, and the move by one of the top performing teams at loanDepot to Revolution Mortgage. James, welcome back to the podcast.
Hey, we're back. How's it going?
We're back. I love having you on twice in a week because so much is happening that it's awesome to get caught up with the mortgage and real estate news by having you on. So thank you for making the time.
Yeah, you got it.
So the first thing is we had some really interesting news this week about CoStar and Realtor.com and then a Zillow exec talking about it. So walk us through that story.
Yeah, this is a real big one. So I believe it was Tuesday night. Reuters and the New York Times separately reported that Rupert Murdoch was considering or had been in talks, is maybe still in talks, to part with Move, which of course is really kind of like the real estate network of companies within Murdoch's very large empire. And the potential buyer, none other than CoStar. And CoStar, as most of the listeners probably know, is a massive player in especially the commercial real estate data side of things. But they've increasingly been really gunning for the residential data space. And so they've made a bunch of acquisitions in their recent past. They have, by the way, for those who don't know, they have much more money than Zillow. So everybody knows Zillow, right? And people talk about it's almost become like the Google, like, oh, I'm Googling this, I'm Zillowing this, right? Like it is sort of like your natural functional, I'm going to check out residential real estate. This is the platform. This is the portal that I use. I look on Zillow. But Zillow has had struggles. It's fair to say the iBuying gambit did not go well. And CoStar has made a lot of very shrewd moves. And they have, I don't know if I would say a monopoly on the commercial real estate data side of things, but they're easily number one in the space. And they think that they can provide a better user experience, that they can provide a better, and this is really important, Sarah, a better opportunity for real estate agents on the residential side with the portal. So they have a portal. It is called homes.com. I don't know that it really has the stickiness that a Realtor.com has or that a Zillow.com has. It's not as well known. They also have apartments.com. And so the news broke from the New York Times and Reuters that the negotiations would value Realtor.com, which is kind of the flagship of the Move brand, at about $3 billion. Now, Murdoch acquired it some odd years ago for about $965 million. And, there's a conference going on here in New York, Inman Connect, and Spencer Raskoff, the former CEO of Zillow, was on a panel, and the news had just broken, of course. And so, he's asked about it, and he says, I think $3 billion is probably pretty low for Realtor.com. And I think he's right, actually. I really do think he's right. So I probably mentioned this once or twice on the podcast. My personal preference, I like Realtor as a portal more than Zillow. I find it more functional. I find the layout a lot easier. I think the search functionality is stronger. I also like knowing if it's in contract, when it went in a contract. It's just, to me, it's more user friendly, which is interesting because, the whole value prop of Zillow traditionally has been like, we're user focused, like we're user obsessed. And I think, that's certainly true that Zillow has gone toe to toe with brokerages, MLSs, and they've always said, we believe in data transparency. But my personal preference, of course, and this is all it is just that it's a better user experience. And so let's say that this deal goes through. Let's say that CoStar, which has, a ton of money. I think it's something like it's 30 something billion in a market cap. Let's say they spend $3.5 billion and they acquire Realtor.com outright. Suddenly they're number two in the Resi portal game, and they're getting much closer. Realtor.com has about 90 million uniques per month. Not in the same stratosphere as Zillow, but definitely the clear number two. They also have apartments.com that could be integrated. Maybe they decide to fold all of this into homes.com. I think it would probably be the opposite, just because people know the brand realtor.com, but it gives them a huge jump. And if I were Zillow, I would be a little bit worried. Certainly, this would probably move them forward a few years ahead of schedule.
So my question is, you talked about the important part of that is the realtor experience, right? The real estate agent experience could be better. And we know that is key. So why do you think that would be better in this sort of move than what they get on Zillow?
So for those who haven't followed the saga of brokerage in New York, it is like a really, really silly kind of almost like
it's a soap
families
opera.
fighting. It's a soap opera, exactly. And basically their longstanding fights prevented a proper MLS from ever having being built. And so Zillow, through StreetEasy gained entry into New York, and that became the de facto MLS. And so what they do is their whole business model, and especially now, since iBuying failed, is they make money from realtors. That is how they make money. That is the business, right? And so if you want to be a premier agent, if you want to be, associated with a listing, even if it's not exactly your listing, controversial stuff over the years, Zillow, they've gotten a lot of pushback on how they're taking money from agents. They charge them, big money to have any rental listings in New York on StreetEasy. They've been, in the eyes of some, very unfriendly to the real estate agent, even though it's their customer, because they have the eyeballs, they have the consumers, they have a captive audience. And if you talk to the folks at CoStar, they say, we don't think that's the right approach. We want to partner with agents. We want to, make this more friendly to them. Our goal is to further the business of the real estate agent. And, they definitely, I think from a business sense, they know that that's a good avenue to take, because Zillow has engendered a lot of hurt feelings on the part of real estate agents over the years across, a bunch of different, programs and platforms. So I think there's a big opportunity. And if they end up getting realtor.com, that is a lot more visibility for agents and for different partnerships and programs that they could use, if the deal goes through.
Fascinating story, and from so many different angles. I love your backstory on Zillow. We know that when Zillow came on the scene, there was huge feelings about them from real estate agents, good and bad, mostly bad at the time. Maybe they've rehabilitated that with agents since then.
Yeah, it's funny, but we spoke. HousingWire spoke to Andy Florence, who's the CEO and co-founder of CoStar, back in, I want to say it was like December of 2021, and we asked them, okay, so you want to be the de facto number one player in the resi data space. Well, you have to address Zillow. Zillow would seemingly have, a grip on home buyers. But his perspective was really interesting. He basically said, Zillow's got 226 million unique visitors or whatever. They're basically peeping Toms. His perspective was, we're attracting actual home buyers. We're attracting actual real estate agents. And the people that use Zillow are just like browsing, they're like fantasy shopping, or they're not serious. They're not actual people who are, someone you can make money on. And so, they've definitely positioned themselves as being a lot more user-friendly than, Zillow, which, people say, agents say, has basically made money off like consumer confusion. And so I think that could be a real opportunity, and it makes for a lot of intrigue in this space too, and it also, I think, probably means it comes down to the two of them at this point, and the other major portal out there is Redfin. Redfin as a company has also struggled, that also took a stab at iBuying, not at the level that that others have. But you could see, a leapfrogging of Realtor, or a leapfrogging of Redfin if an acquisition of Realtor.com goes through. So that would probably be pretty tough sledding for Redfin as well.
Great points. One of my favorite accounts on Twitter is Zillow Gone Wild. And it's somebody who spends their time looking at a huge number of listings and bringing us the ones that will just really make you go, what in the world? Like, one of them was a former, I guess he owned a mannequin factory or something. And he had like,
haunting.
Yeah, it was haunting. So every room was staged with mannequins who had been dressed up, but in a very creepy way, like stuff like that. Anyway, so there is a whole subgenre of like peeping on Zillow. I'm part of it, so I can say it.
Realtor.com gone wild, the next natural competitor on Twitter. Maybe it could be like Andy Florence's like alt Twitter account.
Okay, people are taking notes right now. They're like, I want to do that. Well, we've got lots of other things to talk about, so mostly in the mortgage space. So let's talk about some other things that came up. Better.com, right? They launched a one-day mortgage. What do we know about that?
Well, not exactly. This requires a little bit of nuance here. So, Better, I think a lot of people are probably familiar with the story. They're probably best known for self-inflicted injuries than they are for being a mortgage company at this point. If like my wife does not work in mortgage or business or anything like that. And if I asked her like, hey, that company Better.com, she'd say, oh, is that the one where they fired all those people on a Zoom meeting? Yeah. What about them? I know that company. Like the next thing you think about would probably not be, oh, honey, they actually did this really cool thing, or maybe they did a cool thing. But turns out that is potentially what they did here. So let's break this down. So yesterday, Better.com, which has been struggling for many months, has lost hundreds of millions of dollars. They announced that they would be doing basically a 1-day, 24-hour mortgage approval and could do closings in 3 days. And this would be for conventional conforming, standard vanilla, Fannie, Freddie, 97 LTV, et cetera, et cetera. 3% down, all 50 states. And it got a lot of attention. Vishal Garg, the CEO, announced this at Inman Connect on Wednesday. And, at the beginning, when he was announced and joined the moderator on stage, like people left. People walked out because he's a bit of a pariah in the industry. I think it's fair to say. And when he announced this, actually, there was applause. So I think that maybe speaks more to the fact that a lot of people in the housing space in general have been frustrated at how long it takes to do a mortgage. Like the average is still well over a month. That said, we talk to mortgage lenders, executives, loan officers, LOs, as we call them, every day. And at a lot of shops, that's not true. Any really good mortgage lender out there right now, if they take more than 30 days to do, a pretty conventional conforming government loan, anything like that, you didn't choose the right one, right? Like there's no reason at this point, unless it's a super weird property and like the appraiser doesn't show up, or there's, some problem with title or something like that, right? A lot of them can absolutely do a mortgage in a little over a week. And that number 7 is significant. And I'll get to that in a second. But so basically what Better is saying is we have this technology partnership with Palantir Technologies, which is, the big kind of analytics engine from the Peter Thiel universe of people, I guess, who have blood of children for breakfast and whatever. But nevertheless, and basically what they say is we can create these processes whereby we're able to pretty much automatically get all of our ducks in a row so that investors can know immediately that, everything is set correctly. And then on the other side of it, we have created, a digitization process where instead of having the user, the borrower, try to find everything and going through all their documents and like uploading things and taking screenshots on or finding paper documents and sending them in or photocopying or whatever, that they have, the engine built where they can get third parties, and those third parties can, quickly verify and order things correctly and make sure that everything, in the process is done lickety split. And if that's true, and if all of these things are absolutely what they say they are and can be done, that's, I believe they said it would be something like 65% of bettors originations, were of this profile, and if the borrower is quick and can, get through the system, they can move just as quickly and they can staff it, to the point where they have someone available 24/7. If I don't know that many people who need a mortgage in like 3 days and are that desperate, but I guess if that is, something that occurs out there, then cool. This is maybe worth taking a shot at. However, there are some, I guess, kind of like, I don't want to say confusing elements to it, but things that didn't quite track. So when I talked to the LOs and the executives, all of them were like, okay, great. That sounds basically like a pre-approval. Better insists it is not a pre-approval. Anyone can do a pre-approval in like 24 hours at this point, right? Like, it's just like, hey, are you breathing? Do you have a job? What else? You're
Right.
pre-approved, right? And then there's a big asterisk that says like, oh, also like you have to have this, this, and this, and this, and this. And it's all subject to all these changes, right? So better insists that it is 100% a proper approval. And the rest of it is just getting the underwriting done, and that, they're complying with all federal and state laws. Well, remember when I talked about that week being important? Well, the reason it is important is because the federal government, in their infinite wisdom, said, maybe we shouldn't have a system where people can get a mortgage in a single day. Maybe they need a little time to think about it. Maybe they need a little time. It's called TRID. Very sexy acronym.
TRID is like, listen, we are very familiar with TRID. I spent the first 2 years at HousingWire doing nothing but writing about TRID.
Oh, God.
Yeah.
I can't believe you're still here. My eyes would have fallen out. I don't think I would have survived. But nevertheless, so TRID requires a 7-day period. Now, I'm going to read this statement here because I happen to have it. Better says, it is absolutely complying on all of the requirements here, but they essentially said a customer can receive their loan estimate and start the 7-day TRID required waiting period during pre-approval, the 3-day waiting period to consummate the mortgage. Stop myself there. Starts after receipt of the initial closing disclosure, which can happen the same day as the commitment letter is issued. The borrower would wait until the later of the required 7 days or the required 3 days to close the loan, meeting the TRID requirements. So the waiting period of the loan estimate and the closing disclosure do not need to stack back to back. If the loan estimate is issued early enough in the process so it elapses on or before the 3-day waiting period elapses, we are able to close the loan as soon as 3 days from issuing the commitment letter. So it's not quite 3 days, right? Just to be clear about that. It's basically 3 days when the CD, after issuing the CD and the contract is signed. There are still questions about title, attorney review, appraisal, right? Like, do you know anybody in this space who's like, yeah, man, I got the appraisal like the next day. He was there before I hung up the phone. It just doesn't happen. I know that they have sped up a little bit on the appraisal side over the last year since, a lot of the lockdowns and a lot of the COVID legacy stuff is kind of worn down a little bit, but appraisers just do not move that fast. Title insurance does not move that fast. Attorney review in a lot of places does not move that fast. And who needs a mortgage in 3 days? So again, a lot of questions here, but but it's interesting.
It is interesting. And, we're always saying, hopefully someone makes the process better and innovative. So we want to give kudos to that. At the same time, what the federal government said, what the regulators said, that the whole point of TRID was to give people the opportunity to shop around. Shop mortgage lenders. But we know that consumers don't do that much. It's not like, I'm going to go through the hassle of I'm going to go through with 4 or 5 different and really, even understand what it is they're looking at to compare apples to oranges, right? Because if someone's writing it down in a different way or giving you points or whatever, but that was the whole intention. I'm not sure that ever got accomplished, but you do have to wonder, how does that work here if you're sort of racing to the end of that? Is there any sort of competitive nature there? But again, I'm not sure anybody did that very much anyway.
Yeah. I think if they were to be trying to supersede the TRID process, the regulators would very, very, very quickly say, hey, excuse me, hello. No. You cannot do this. So maybe years from now, we'll think that this is, these regulations are an obstacle toward people, getting the home buying process accomplished more quickly. I do think that certainly if this technology is as responsive and as smart, that they're using a lot of machine learning, a lot of AI, and for all the promise that carries, it's not bulletproof. It's not, mistakes definitely get made. Did you see there was I can't remember the company, but they had an AI journalism article, and the whole thing was completely wrong, and they had to rewrite the whole thing. And it's AI is not right now. It's not the finished article.
Good point. And I agree with you that, after going through so much headache to get TRID implemented, I can imagine that they're going to be looking at that and making sure that, the regulators, Better.com itself, I'm sure was very aware of that. So we'll see. That's an interesting story that we're going to continue to look at. I do think it's interesting that Vishal Garg, when he started, people got up and left. And then by the end, he had at least won some people over. I mean, got to give kudos to the guy for that. That's huge.
Yeah, and you know what? If you look at Better and where they are in the market, they've fallen to number 42 on IMF's originator list. They have a SPAC deal that I think looks pretty unlikely to be completed. The likelihood of them going public, most of the analysts and experts that I speak to think is pretty low. They need a home run. They need a grand slam. Maybe this is it. And if they can use this, they call it the Tin Man platform. If it really is the real deal, and they can partner with real estate agents, they can partner with other mortgage lenders, to use that as the platform. Maybe Better ends up, being one of the winners of, the kind of mortgage tech revolution that some talked about, willing it to exist in, the early 2020s. So I think that would be pretty cool. But keep in mind, there are a lot of other mortgage companies that have a ton of money that also use machine learning, in their underwriting and, processing, origination work. So Better's not the only one out there doing this kind of work. Maybe they do have, the iPhone of, of mortgage here, or whatever, the great invention that revolutionized the printing press of mortgage, right? But I think you also have to take, given their history, everything with a little bit of a grain of salt.
We will definitely keep an eye on Better and technology in general. Another big story this week, so many, was that we had a pretty major move from loanDepot to Revolution Mortgage. Obviously that, we covered the fact that Brian Covey, who is a very well-known kind of influencer in the mortgage space, moved from loanDepot to Revolution at the end of 2022. And now we have one of their top producing teams going over. Tell us about that story.
Yeah, so we've got about 25 people from loanDepot's, if they're not the top producing team, they're definitely way up there. And this is an originations team in sort of the Washington, Idaho area. And they're going to be reuniting with Brian at Revolution Mortgage, which is more of kind of a, a direct lender that is really trying to gain market share in a challenging market right now. And so this is a pretty interesting one. We've talked about other top teams moving and, the complications and the reasons why they move. And, I think this one is especially juicy. So Stacey Chevalier, she's the former area manager for this team in the Pacific Northwest. And she had a team of about 55 employees, including LOs, LO assistants, branch sales, marketing managers, and they did about 1.8 billion in sales volume in 2021. And so, according to Stacey, this was the most profitable team for loanDepot, and they did the most closing volume, most units, most revenue. And she left in December. So, or I'm sorry, January. She left in January, and she went over to Revolution. And at that point, according to sources, loanDepot gave the remaining team that was there an ultimatum and said, either you join a new team or you leave. And so Stacey estimates that about 80% of that 55-person team are going to end up joining her at Revolution. And so this is a big get for Brian Covey and the folks at Revolution. And when we spoke to Brian last time, he basically cited a desire to move away from kind of the more cookie cutter, non-personalized model to work at a company where really the lender allows the LOs to call more of the shots and to kind of dictate their sales process. Almost like a little bit like how Side does it on the real estate side, or in some ways Compass, where they basically say, like, we're not going to try to control your message and control your brand, your clients, how to do it. And so we want you to do what you do best. And that's originate mortgages. So this is also an interesting one because, loanDepot struggles have been pretty well documented. They exited the wholesale space. They've lost a lot of money. Things looked pretty bleak when we last checked in with loanDepot, I believe at the end of the third quarter. And their projections for the fourth quarter in origination volume were down to something like, I don't have it in front of me, but it was like 6 billion. I mean, that is paltry for a company of that size. I've always thought of loanDepot as like perennially a top 5 lender, and
for sure.
What, number 2, number 3 in retail, huge company. And they've made a lot of layoffs. They've kind of repositioned themselves. They've, really, they've had a lot of reorganizations. They've had a lot of people who have had 4 or 5 different bosses in the last year. We get a lot of messages from people who are still at loanDepot and those who have left, who have complained about just kind of the chaos. And I think whenever a company, and this is not to dog on loanDepot, whenever you cut thousands of people at a company, there is going to be some chaos. If you're a company of 50 and you cut 29 people, there's always going to be chaos, right?
Right.
It's unavoidable. And the business just wasn't there to support that many mouths. So I think people in mortgage especially know that because it is such a cyclical business, but that doesn't necessarily make your life better. Like knowing that, oh, this is something that happens in mortgage doesn't mean you just say, well, here's my situation. Here's my story. I guess I'll just go to work the next day and, deal with it. Some people said, I'm going to look at other opportunities. I'm going to go elsewhere. Or they got laid off. And so, loanDepot, there are a lot of smart people who work there. They have a lot of great marketers. They have really seasoned executives. They have a plan. They are, reorganizing to fight another day to some extent. They're launching new products. They're trying new things. I think, people should give them credit for not just trying to, ram the square peg into the round hole. They're definitely looking toward a different market and right sizing to meet the conditions that exist today. But yeah, it's not going to be an appealing place for some people. And so when you have a rival like Revolution, or, loanDepot's lost people to Guild, they've lost people to cross country. I mean, they've lost people to the broker space. I'm talking about the more kind of like LO origination side of things. Those are the consequences of making those business decisions. And it's not exclusive to loanDepot either. Plenty of other lenders have also made very significant cuts and confronted questions about how to reorganize, how to keep people happy, keep people motivated, keep people interested, keep people competent, right? You need to keep enough people with institutional knowledge. You need to keep enough people who know how to do a complicated loan if you happen to get one in your pipeline, right? So it's not easy. It's definitely not easy, but in a market like this, people are going to take opportunities when they find them. And I think that's really what the story is about. And it's a big, big get for Revolution, which is still comparatively a pretty small lender.
It is, and it's another sign that they're taking this really seriously and going after some of the top performing teams, or I don't know, going after, but these things happen as they do. But I think it's really interesting. We're going to be looking at Revolution going forward, as well as all of these lenders. That's what we do. We love to look at the real estate and mortgage space and give information that people need. James, thank you so much for being on. Amazing, and we will have you on again next week.
No, you won't actually, because I'll be in Puerto Rico, Sarah.
Oh, I forgot. You will be in Puerto Rico. Congrats to you. That sounds like an amazing time and well-deserved time off for sure.
All right. Well, thank you so much. And I'll talk to everybody in a few weeks.